Hey everyone, today I will show you PMT function in Excel. The PMT function calculates the payment for a loan based on constant payments and a constant interest rate. This is incredibly useful for loans like car loans, mortgages, or student loans. Let's say you're taking out a loan of $200,000 to be repaid over 25 years at an annual interest rate of 6.5%, and you want to calculate the monthly payment. Now, let's apply the formula. Click on an empty cell and type equals PMT. First, we need to select our rate, and we need to divide annual rate by 12 months. Then we select total number of payment periods, so 25 years, and multiply it by 12. Next, we select present value or the loan amount. And then hit enter, and Excel will calculate our monthly payment. It's negative because it's an outflow, money we gonna pay each month for 25 years to repay this loan. And that's it. You now know how to use the PMT function in Excel to calculate loan payments. This is a powerful tool for managing finances and understanding loans better. If you found this tutorial helpful, don't forget to like this video, subscribe to the channel, and hit the bell icon for more Excel tips and tricks.